Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Kelvin, thanks for coming in on this Thursday.
My pleasure, Ryan.
Now, before we get your insights, let's take a look and see how crypto markets are performing. And then after that, we'll go at regional markets. Now, Bitcoin is at 44,103. It's down 2.18%. Ethereum is below the 3,000 mark. It's at 2,981.1. It is down 2.03%. Now, if we look at how regional stock markets are performing, it's a sea of red. The Nikkei is at 27,386.45. It's down 0.72%. The Shanghai Composite is down 0.71% at 3,460. The Hang Seng is down 1.71% at 25,425.28. The ASX 200 is down 0.4% at 0.4%, correct, at 7,472. Kospi is at 3,111. It's down 1.49%. Closer to home, we've got the SGX, which is down 0.97% at 3,101.02. And rounding up the numbers, we've got Bursa Malaysia, which is at 1,517.62. It's down 0.5%. Kelvin, what's the reason? It's across the board negative, red ink all over. Tell us more.
Yeah, sure. So what we are seeing in the current situation in the market now, right, is the intensifying of this peak growth narrative that we start to actually getting more pronounced in the last couple of weeks. So basically, what's peak growth? So everyone is pretty much concerned right now is that the stimulus package that was actually so-called introduced or kind of implemented by global governments to combat this drastic fallout from this pandemic crisis last year, the effect seems to have started to warm up. All right. So what we start to see right now is in terms of key economic data, stretching from China PMI, retail sales, even to US retail sales, and even you're talking about housing stats. Yesterday, you have a housing stats which came in below expectation. So all these actually indicating a softening of growth. So what we could see right now, right, is actually the reflection of this peak growth that's been crept into the market. And secondly, over here is a negative sentiment as well from this ongoing so-called never-ending regulatory crackdown imposed by these China's tech sector, and even now spreading to the wider Chinese economy by this China regulator or China government, where all this regulation seems to be getting more nationalistic rather than best business practices. So that lead a bit of panic, a kind of a sell first, then talk later kind of mentality that's been creep into this China tech stock space. But which I feel that in a very short to medium term, I feel that we already reached to the point of fear and panic, where, example, the Hang Seng Tech Index, the benchmark for those China big tech stocks like Tencent, Alibaba, Meituan, JD.com, it's been falling down lower weekly closes for 8 consecutive weeks. So that has never been seen so far in the history of this Hang Seng Tech Index. So what we could see over here is a kind of panic selling and panic despair. So usually when this kind of scenario happens, statistically, right, potentially we could lead to a mean reversion rebound as more from a short to medium term perspective. Yeah, so this is the current situation right now that's driving the weak sentiment in Asia market as we see today.
And also, Kelvin, it extends to the Australian market because of iron ore prices falling overnight. Rio Tinto dropped almost 6%, 5.95%. Fortescue Metals 6.78%, BHP 6.31%. So these are very significant downward revisions on the stock, and of course, as you said, it plays to that narrative that we have peak growth, and therefore commodity prices have peaked because oil prices have also declined overnight, haven't they?
Yes, precisely. So we're talking about this peak growth narrative over here is actually, if you look at it over here, is I would say that's a softening of these commodity prices that has been pretty red hot since the first half of this year. So if that is a scenario, we're talking about a softening of this commodity price, right, it should actually lead a bit of comfort, right, to traders or investors from a central bank perspective. Why? Because if you recall over here is that especially the Fed itself, the Fed has a kind of view that they view that the current situation of commodity prices fitting into inflation scenario tends to be more temporary rather than persistent. So
Yeah.
if that actually plays out, what the Fed is expected to be, they could be, or they may be not in a rush of actually start to actually kickstart their interest rate cycle. So in fact, right, from a longer term perspective, right, that could be actually positive for risk asset like the stock market.
Okay. And how about your market reactions to the Fed minutes yesterday, and how do you think Jackson
Yes.
Hole will play out?
Yeah, so if you look at the Fed minute yesterday, right, to me is there's no major surprises because yes, there's a debate going on among the members saying that yeah, some of them have started to highlight that yeah, we got to start tempering before this year end. So all this has already been made known to the public. It's not unknown, you see. So in
Yes.
the last couple of weeks, right, several key Federal Reserve officials have already sing to this same tune of tempering before the year end. Okay, so I look at from the way the S&P markets or the US major stock indices perform overnight. In fact, right, that sell-off actually came 1 hour after the release of the Fed meeting. So actually, it's not the Fed meeting that drives the negative reaction to sell-off. It could be some other things. There's no key economic data releases at that point in time when the sell-off took place, which is the last hour of the normal US session. So it could be just purely order flows taking into advantage of that lower liquidity environment at that point in time. All right.
Okay.
So now, how do we translate to Jackson Hole right now? So if the markets, if the Fed already start to lay out its guns, right, saying that hey, there's a high chance that we may temper before this year end. So Jackson Hole story, right, may not be a live event anymore. See, because the
Okay.
market
Because it's already
expecting
been telegraphed, essentially.
yeah, it's been telegraphed. Unless the biggest thing is that suddenly Powell starts to say, hey, I want to start the first interest rate hike before 2021 end. So that would be a big surprise. Because
Okay.
usually what the Fed usually does always is that they will actually the aim is to start tempering first to a certain extent before they start hiking the interest rate hike cycle. Because right now interest rate cycle, right, based on the market scenario, they are pricing in more or less the first rate hike to come in around June to July next year.
Okay.
So that's the general consensus right now. Yeah, unless Powell start to hint something much more drastic, say that hey, right now I'm going to bring forward the first interest rate hike to maybe much earlier before the end of 2021. So that would be create a kind of a negative feedback loop into the markets. Yeah.
Now, Kelvin, final thoughts from you before we end this. What do
Yes.
we need to look ahead this afternoon and for tomorrow?
Okay, so the key, so what we could see over here is that the key economic data left, right, for this week, definitely number one is related to China. Why I'm saying so, because if you look at the last few weeks of China data, has been pretty lackluster. We're talking about PMI data, we're talking about retail sales, we're talking about industrial production, all came
Yeah.
in below expectation. So China itself also is facing this kind of peak growth narrative, where if you look at the China regulators or the China central bank, they are being quite stingy in terms of adding liquidity to the market. Yes, they did surprise with RR cut last month for the bank reserve requirement, hopefully to actually do more to lend more to the Chinese corporation. But this Friday itself, they could actually do much more because this coming Friday at Singapore time 9:30, they will actually announce the decision whether to actually change the loan prime rate. So this is one of the key official rate itself, something like a
Okay.
Fed fund rate. So they call it the 1-year loan prime rate, which has been unchanged for 15 consecutive months at 3.85%. So
Okay.
if they start to actually reduce by 25 basis point to about 3.65, that could actually create a boost, right, to this ongoing negative sentiment on the Chinese tech stocks. So it's pretty much interesting to watch how this actually play out on Friday. And to end on that as well, on Friday itself, we have yeah, so that's about it. Also, yeah, so that's the key thing we have on Friday. Then, yeah, we have on UK side, we have a retail sales figure, which is at 2 p.m. Singapore time for July.
Thanks a lot for your insights, and good to have you, Kelvin.
Most welcome, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.